PIMCO's head of policy, Libby Cantrill. Libby, thanks for joining us. Good to see you.
Thanks so much.
What is your immediate reaction from the tweet and what we just watched there from the president in terms of 10% rather than 25% tariff and the fact that it's delayed to September at least?
Yeah, look, I mean, I think that the expectation going into these meetings in Shanghai were very low. I don't think anybody thought there was going to be any sort of breakthrough. However, based on the statements both from the Chinese and the Americans, it seemed like the discussions had been constructive. Of course, from the president's tweets and then these comments, there are still some big issues that remain. From our understanding, however, and this is sort of interesting, is that this could have actually been associated with the goods purchases, which are actually the easiest things in all of these negotiations. The bigger issues, the more intractable issues, have been these structural ones, the enforcement, the IP, the forced technology transfer. And the reason I bring that up is if they're sort of quibbling about the easier issues, then that means that a deal is likely quite elusive. That means that the more intractable issues are going to be even harder to reconcile.
So at this point, where do you put the odds of these tariff rates going up even further to potentially 25%?
Well, look, I think, just taking a step back, it's important to remember that these tariffs are not actually escalating or not going to be imposed until September 1st. So there's still a month now. So as the optimists can still hope that maybe these are avoided. I don't think, in my personal view...
You think you could pull a Mexico, as Mike's been saying?
Yeah, maybe. I think the political dynamics around this are quite different. He has a lot more support politically on going hard on China and trying to get a deal on China, whereas everybody opposed those tariffs on Mexico. So maybe we see a pivot. Maybe if the market continues to sell off, we'll see a pivot. I don't think personally that's likely. So what we have seen, though, is he puts tariffs on and then he uses that as leverage and then he tries to escalate. And that's been the pattern all along. It was a pattern with the first tranche of tariffs, the second tranche of tariffs, and potentially could be.
But if by what you're saying, if this is associated with the goods purchases, that if China comes back and says, fine, we'll buy the farm stuff, and then pulls away. I mean, not before September 1st, but at some point.
Sure.
I'm thinking about it in terms of market psychology, where they get upset about something, and then it goes away, and it's okay again.
Yeah, but what we've seen is when tariffs are imposed, he is very reluctant to roll those back, right? I mean, we had this USMCA deal, and he still had steel and aluminum tariffs on Mexico and Canada. So I wouldn't be too optimistic that we would see an immediate rollback, even if they were to make those ag purchases.
What do you think the rate cut enabled the president to do this, or do you think the fact that the rate cut was only 25 sparked him to do this, to get the extra cut? Are they linked?
I mean, look, I think there are a lot of theories out there, and we can all speculate. I mean, in some ways, did Jay Powell give him a bit of a green light to go harder on China? Sure. I think it was interesting that in that press conference, Powell mentioned trade policy uncertainty so many times. So clearly that seemed to be a signal to the president that they would respond sort of in kind if there was more trade policy uncertainty. But I really do think that this latest action was because of this sort of recent breakdown in talks.
Libby, thanks for joining us. Great to see you.
Thanks so much.
Libby Cantrill from PIMCO. Still ahead, find out how you can protect your portfolio against trade volatility in this market. We're back in a couple minutes. Don't go anywhere.